Hey, it's the Stock Doc this morning talking to you about why I think Facebook is poised for a breakout. Now, let's start by analyzing what's called a base on base pattern. And the way this works is if you look at your screen, you'll see the left side starting in late July, early August, somewhere in there, that you had a peak of the left side of this cup. And the cup declines pretty precipitously. So we don't love this cup, but nonetheless, it qualifies as a cup. And then you see an improvement on some decent volume up the right side. A very short amount of weeks in a row, but there's some good volume there coming back up the right side. Then you see a mild correction and the volume dries up on that correction in the handle. And that's what you want to see in a good handle, kind of a low number of shares being traded, so there's not a lot of conviction on the sell side, and a low amount of movement on the handle until it gets to the point where it just kind of can't handle it anymore and the stock breaks out, which is what you see it did with the green arrow there. That green arrow is the breakout. Look at the volume on that green arrow breakout. It's way above average and it's higher than the week before it. So we like to see those characteristics. And if you look at what happened, there's a little bit of a pause there right in the handle, and the stock really couldn't get going until all of a sudden it coiled that spring and it popped higher, and you can see what Apple did after that. If you analyze the cup and handles and then a base formation, even though it's really short, you can get some powerful moves off of those formations. So now let's look at Facebook, which is the stock that we believe is poised to go higher. The fundamentals are good, just like Apple's were back in 1997. And Facebook is setting up kind of a similar pattern on the right here. You see what happened the last time it did this big cup and handle on the left. It had a cup, a little bit of a handle, kind of diddly-dallied around for a few weeks, and then it had a nice high breakout, and then it didn't really do much after that, but nonetheless, it just hung around, and the institutions just kept buying it. Notice how there's kind of support there over several months, and then it made another official cup with handle right there. Notice how on the handle, the volume's fairly dried up, and it's not spiky volume or anything like that in the handle. And then you see the breakout right here. The breakout's on about 30% increased volume, and it's higher than the week before, just like on Apple, right? And then it's going to dilly-dally around in here because it has what we call a false breakout. The breakout really wasn't enough to get the momentum going. Plus, we've had kind of a rough market here in the last month where the market hasn't really gone up much at all. In fact, it's kind of gone down in the last month or so. So Facebook's not really getting the sympathy from the market. So it's just kind of hanging around. The institutions are holding it up. It's not going down very much, not going up very much. And as it just kind of hangs around, it's coiling that spring. So we think that there's a really good chance that coming up around earnings, which is the 21st of April, we're going to have a big bounce. Could go the other way. We never know. But the way the formation's setting up, this is why we study technical charts. The way the formation's setting up, we believe that the probabilities are in our favor now for a big bounce in Facebook.